In money matters, the JSE was weaker earlier today, while its global peers remain mixed. This comes as the rally backed by bets that the Federal Reserve may reduce the pace of its rate hike runs out of steam. The all-share index had accelerated to a record high on Monday on those bets. On the commodities front, oil has dropped on concerns that higher interest rates from the United States Fed will limit demand, with some analysts warning China's revival may play a limited role in driving prices higher. What does this all mean? Well, Simon Brown is with JustOneLap. He's the founder there, and he helps us to make sense of it all. Simon, good to see you. So has the SA share market become increasingly sensitive to China, and what does this mean for big miners and industrial stocks in particular?
Judy, good day. It absolutely has. If you look at the three biggest stocks in our market, which are almost a third of the entire market, it's Richemont, who sell luxury watches and the like, and China's a big part of their market. Asia is, but China in particular. And then, of course, Naspers and Process, who own Tencent, and Tencent is one of the biggest companies in China. So directly we are being influenced by China. And you mentioned commodities and industrials. The mining companies will do all right. China's reopening, you mentioned in the intro, it's not going to be all plain sailing, but that will help, and that will keep commodity prices probably firm this year, and we should see some uptick in the next couple of years ahead. Industrials is going to depend where they're operating. Some of those industrial companies locally are in the mining space, and they will benefit from it. So it's going to be piece by piece when we start diving into industrial as to who's going to really benefit from China and their move away from the zero COVID policy.
Simon, do allow me to digress. If you can talk us through this, given that South Africa is assuming chairmanship of BRICS, and to your point that China is heavily influencing us, what then will this all mean, and what opportunity is there for the country, South Africa in particular, to sort of align itself to grow in the right direction?
I think, Judy, if we stand back, and not just BRICS in South Africa, but generally there is a sense that sort of the rise of the East, if we could call it that. We've had sort of Western power, and I'm thinking particularly North America, to a degree Europe, for the last 100 years, even further back if we bring in the UK. We've certainly seen that shift. China's been playing a significantly bigger role in Africa. And that's, a lot of folks think they're coming in and buying the assets and the commodities. And yes, to a degree they are. But they're also bringing in a technical know-how. They're bringing in capital. They're bringing in loans. And the relationship with China, and it needs to be a carefully moderated and thought out one. But China is an economic and political superpower, and they're much more open in many senses. And it sounds weird, but America's almost, very much more protectionist than in many cases China is. China wants to engage. China wants to work with much of the world, and certainly with Africa and South Africa,
as we have seen throughout the continent. So when we take a look at the Fed's rate decision, what to expect there?
I think we'll get a 0.5, a 0.5% increase. There had been some worries about maybe we would see a 0.75% increase, but I think those have been alleviated. We got some good jobs data out from the US on Friday, which shows that the economy is still doing fairly well considering the increases in rates. There are layoffs happening, particularly in the tech space, but broadly the American job market is quite strong. And inflation certainly has been coming down. And one of the big drivers, for example, is what they call a shelter, which is homes, renting, buying, gas, which of course are petrol. Those have both come down quite markedly. I think we're going to see US inflation fall off fairly quickly in the second half. So the Fed doesn't have to get too aggressive. So I think 0.5%.
Let's come back home and take a look at the factory index that tracks manufacturing data out of Stats. Essays suggests rather that price pressures have peaked. What's driving that?
I think price pressures probably have peaked, and I think there are a couple of drivers. One is just the cost of petrol. We saw around a R2 decrease this month. We saw a slight increase in December, but we're off those, where were we, mid-20s, where we were sort of in the third quarter of last year. And a big important point has been supply chains. And the supply chains were literally just getting goods from A to B, and either you were paying much higher costs or you couldn't get the goods that you wanted, and that's created all sorts of friction in the system and pushed prices higher. So I think probably the data suggests prices have peaked. That makes sense. I think we can expect it to come down. Again, it's going to be a little sticky at first. I think the momentum on the downside probably only happened towards the middle of the year.
If you enjoy your fingers licking good, we know there's problems there because of load shedding. The company's having problems with supplying chicken to folks, but Astral Foods is also the latest company to announce that they're also facing some challenges, and we can put it all down to what? Load shedding?
Load shedding. There's some infrastructure issues. Water is a challenge in parts for Astral as well. But it is load shedding. The chickens need to be kept at certain temperatures. That often is requiring heating or perhaps cooling, depending exactly where it is. And that, of course, is electricity. It's one thing to say, well, why not some solar panels? That works at a cost. But of course, then the sun sets, and then you're back in the problem. And load shedding's not new, but the amount of load shedding that we've seen since that stage 6 in late June last year is unprecedented in the economy, and it's hurting, and it hurts the high electricity users, and Astral is certainly one of them. Their biggest cost, of course, is feed for the chickens, but the lack of power means that they've actually got to cut back, or maybe they've got to do shorter bird growth, which means smaller birds, and just creates all sorts of complexities. And as you say, it hits our KFC.
Hurts, right? I don't know if you've caught wind of this, but yesterday we spoke to the Trucking Association, where on the N2 there's a queue of trucks, and those are allegedly coal trucks, where we are seeing high quality coal being shipped out of South Africa, heading to some European countries and China. Of course, it's all being put down, their energy crisis, to the Russia-Ukraine war. And then we have to understand that in the context of COP27, where we are as a country being encouraged to move away from coal, yet the top-tier coal is being exported out of South Africa. I do wonder if you've had a chance to formulate an opinion on that, in terms of, trying to understand how it actually impacts on business as well. You and I, obviously, but here we're seeing you can't even get your favorite chicken anymore.
It absolutely, and the coal issues, lots of nuances in it. Thungela is the big coal exporter, Exxaro is another, and they're typically doing a fairly high quality export coal, which Eskom doesn't use. Eskom wants a lower quality coal. So we get some benefit from it. Certainly it means hard currency coming into the country because it's been sold in US dollars, and that helps us. The other side of the coin is when I've driven that N2, I've lived around Richards Bay, I've been out into Mpumalanga. The trucks on the road is frankly a disaster. It's dangerous, it's a huge expense, and it damages the roads. They should be on trains, of course, and that's the door of Transnet. And we saw problems last year with force majeure. We saw derailments on the coal line heading through to the Richards Bay coal terminal, and those sort of things, whilst maybe not all directly related to Eskom, certainly if you're in Mpumalanga and coal's been moved by truck, that's just not economical and not good for anybody, and it does impact the implications. To your point on COP27, we need to move to that renewable. Minister Gwede Mantashe is, with respect to the minister, kind of digging in his heels on that. We're seeing other territories out there, and it's not chicken and apples and apples, I appreciate that, but other markets, thinking particularly Australia, parts of Europe, we've gone very green. Frankly, in just a couple of years, while we're still here struggling with coal-fired power stations that are beyond their life expectancy.
It hurts, Simon. Anyway, food retailers in general are set for a tough 2023. Why?
They're being squeezed by Eskom. Of course, that's a cost. They're being squeezed by just municipal costs generally going up. Insurance costs, we've certainly seen an increase on that. So they're absolutely getting hit on that side of the equation. The consumer is under pressure, so we're shopping more carefully. I think a lot of the Christmas lunches, perhaps there was a little more potatoes and a little less meat on the table simply because of budget constraints. The good news is that interest rates locally, probably if they haven't peaked, they're very close to the top of it. And as you said a moment ago, inflation's starting to come down. We're starting to see that ease out of the system that will help them. But it is going to be a challenging 2023. Of course, in the retail space, they very often are going to try and pass that on to a consumer. But as I say, a consumer already under pressure, so it's not going to be easy.
So what do you say to that consumer that's already under pressure, right, that says, or hears, invest, 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 save, 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 and somebody's just like, I can barely make it, right? Because you also have people repaying debt. Your advice in terms of taking that 100 Rand and putting it somewhere so it grows somehow?
Look, I'm a big fan of invest, of save. Absolutely I am. But the stark reality is you've got a family first. You've got to feed them. You've got to clothe them, shelter them. Kids are going to school, and it is tough out there. My advice to folks is if you're struggling to make a day to day, investing sounds great. It's just not practical in that world. What I would say is, as far as possible, is look at your debt and see if you can't work at that somehow. And again, in the immediate, that might not be easy or even possible, but something to have as, well, okay, maybe let's revisit it in a month or 3 and see what we can do, because debt is expensive. My sister went for an unsecured loan recently, 24%. I mean, it's crazy rates compared to, on a house or a vehicle, but it is tough out there. Saving is great, but looking after your loved ones takes top priority.
Simon Brown, founder of JustOneLap. Thank you.